Hey there, welcome everybody. It's Walter Peters here. You're here at the Naked Forex webinar this week, of course, and we have a guest speaker. It's great to see so many familiar faces here. I see Ramesh is here, and Luca, and Albert, and Stacy, Greg, Manoj, of course. Hey, Manoj. Pan on Fire is always here. And Kanu, Mohammed. I'm going to miss a lot of people. Jake and Linda. Thanks so much, Ty. And hey, Jake. Thanks so much for spending time here. We're going to talk about hedge fund trading, private traders, managing money for others. And we have a special guest, as you all know. It's Colin Jessup. Colin Jessup has actually a lot of experience in this area. Colin worked for a hedge fund in London, and he has recently told me that he's just locked into another one. So maybe we'll hear a little bit about that. I thought it would be good for you to hear from someone who has experience and can talk to what it's like to, one, get a job like this, and two, what you need to do in order to make sure that you're working with a reputable company. Before I introduce Colin, I just want to mention one thing, and this is really important for those of you that are looking for jobs like these, because there is a lot of misinformation out there regarding these types of jobs. And here's the one thing that you need to know. Again, I'll just say this briefly and then we'll go on. Here's how, well, actually, let me ask you something. If you go and do a job, go for a job interview, what's the normal thing that happens? What's the normal procedure? Well, you go to a job interview and somebody will probably ask you some questions and see what kind of person you are, maybe get into your personality and what you like and you don't like, what skills you have and things like that. And then they'll probably ask you for some money, right? Is that what usually happens when you go on a job interview? Of course not, right? They don't ask you for money. And that's really one of the things that is so critical about looking for a job where they say that you're managing money. If there's any time along the way when they ask you for money and you're told that you're going to be a hedge fund trader, just know that that's not a real job. That's some sort of weird scam thing, right? Because what's happening, obviously, is you're trading your money for them. So it's just one thing to look out for, because there's a lot of sort of pseudo hedge fund jobs out there, and they're not real hedge fund jobs if they ever ask you to pay them money, right? Because that's just not what happens when you get a job. You don't pay money to take a job. They pay you. That's why it's a job. So let's get into it. And Colin, I'm really happy to have you here and welcome you to our little group here. It's so great to have you, and I'm looking forward to having you show us precisely what you need to do to go from stud trader to hedge fund trader. So I'm really looking forward to this, Colin. Thanks so much for getting up in the middle of the night for this.
Hi, Walter. Hi, everyone. Thanks for having me here. First of all, yes, good morning, everyone. Hi, Walter. Thanks to Walter and FX Street for having me. I thought today, basically what I'm going to do is I'm just going to go through a few steps that I took to get myself a couple of positions now as a money manager. A little bit about myself. I actually started out basically as a warehouse worker several years ago, and a bit of an entrepreneur, and I found my way into Forex, which basically became an obsession. And over the course of a few years, I did a few things right and I did a lot of things wrong, and eventually I got to a point where I had a system that worked, and basically built myself a profile, especially an online profile, that allowed me to attract the attention of some of these firms that I work with. And so I'm just going to go through a few points here, and of course I'll take questions and so on. Of course at the throughout and at the end, definitely we'll be able to answer some questions. And so I guess we'll just get started if everyone's ready. Okay, so The first thing I want to talk about is your method. Now, whether you've got a method now that you're working on or that you've been working with for some time, the first and most important thing you have to do is you have to know your system inside and out. So whatever your system is, whether it's scalping on the 5-minute, swing trading on the monthly and weekly, or on the 4-hour or the daily, maybe you're an intraday trader on 15, 30 minute or 1 hour candles. It doesn't matter, but that system, you need to know it inside and out. You have to have rules, and this really applies to any trader, no matter what. But when you're looking for a position to manage someone else's money, it's very important that you have those rules. And some people will request them, though, especially when you go to work for an investment firm. They will definitely want to know what your rules are for entering and exiting trades, what your time frames are, all that kind of stuff. And, once you've established those rules, you've got your system, you have to stick to it. You can't vary unless you're still in the testing phase. But really, once you've cleared that testing phase, you really need to stick to those rules in order to prove that you're, to make your system work long term. You only take the trades that meet the rules, of course. You don't play a cowboy and take anything extra. It might look real juicy, but sticking to the rules, consistency really is the key for building a strong track record. Don't overtrade. A lot of people, again, if you're a scalper, I guess overtrading, I'm not sure how exactly overtrading would work, but I know for myself, I find that if, I trade largely 4-hour charts, and I find that I can sometimes get a little bit carried away and end up trading, too many cross pairs or something. So I actually narrow my trading down to a smaller number of charts than I used to do. But that keeps me from overtrading, sticking to my rules and doing that. When you establish your account, if you do trade more than one time frame, so if you trade 15-minute charts and 4-hour charts, it's really important that to establish a track record, you should have a different account, and a live account at that. If you're, once you've gone through your demo phase, or your back testing, you need one account for each time frame, because if you mix 15-minute and 4-hour or 15-minute and monthly, or something like that, you're going to get some very strange results. It's really not advisable to trade more than one time frame on any single account. And even as a retail trader, that is usually something that most people should take under advisement as well. And of course, money management. It's all, the single most important rule I would say about your method is you have to have proper money management. If you're going to show that you can consistently make money and you're not going to blow the account up when the investor invests $10 million, you have to show that you're using proper money management. And the only way you'll ever be a successful trader is by employing proper money management. Whatever your risk parameters are, some people will risk 1% on a trade, some people will risk 2%, some people risk 5%. But if those are your criteria, you have to stick to them. So money management is extremely important. And what this all ties into is, the rule is to be consistent. So throughout it all, in order to build the proper track record, you just really need to be consistent in all of these items. Do we want to take questions on any of that, Walter, or should we just move on and take questions at the end? That account never, but the trick is that they never closed the account. They started with $500 and continue to trade that account and built a track record off of that $500 account over the course of 2 to 3 years. It really doesn't matter how big the account is. Most firms that might give you the opportunity to trade some money, all they really care about is is the money management and consistency and so on that we saw on the first slide. It's all about the pips and percentages, not about the money involved. So it doesn't matter whether you're trading $500, $5,000, or $5 million. The percentages, it's all relative. So 1% risk on $1 million account is still 1% risk, for example. So if your rules are to risk 1% on a $500 account on each trade, when you switch over to larger money, you're still going to be using those same parameters. So let's go at, using 1% as an example. It's very important that once you begin trading live and you want to establish a track record to get noticed, it's very important that you keep your accounts open. Even if you switch brokers, you should definitely keep the account open, keep $10, $20 in the account, and then the broker, your old broker or your previous broker or the broker that you're no longer with is actually forced to keep your account open. And 10 years from now, as long as there's something in the account, you can go back and you can get those account statements for verification purposes. So always leave a few dollars in the account so the broker has to keep records. The next thing is there's some really cool tools out there. When I first started, I had to analyze my trades in an Excel spreadsheet. It took me hours and hours and hours to get data that I wanted out of it. But now there's some really, really great tools out there. FXstat, MyFX book, all those kinds of things. I personally think FXstat is great because it gives you all kinds of data that you normally wouldn't get, especially wouldn't get out of an Excel spreadsheet, or at least not very easily. So these can really help your trading. You can analyze your trading to see, how's your money management doing, what's your risk to reward ratio, what's your win ratio, do you win more longs than shorts, all that kind of stuff. So it's a really great tool for building that positive track record that you're going to need in order to manage money for others. And then finally, minimum of 2 years active history. There are some firms out there that say they'll take you on at 6 months. I wouldn't. They're probably going to want something from you. You might get started at 6 months if you're really lucky. But most firms are not even interested. Most legitimate firms are not even interested at all unless you have 2 years worth of track history or more. Most of the firms that I've dealt with, unless you've got 3 years, they won't even talk to you. So that's why it's so important to keep those account statements live and to keep, once you open an account, continue to trade it. Even if you have to deposit more money, it's still about how did you recover from your loss and so on. It's really all about the long-term track record. So that's very, very important as far as your track record goes. And then, how do you get started? Where do you start managing funds? Well, one thing you can do is you can start with friends or family, but friends or family also comes with a little bit of a stigma attached to it. It's not always best to go into business with friends or family, but you could start with a small amount of money, and at least then the account can be in someone else's name. And managing money for someone else, whether it's your family or a friend, actually exposes you to stress that you wouldn't know trading only your own money. So that's one way to get started. You can also look at joining, some of these sites that offer trade copiers. You can start offering your own managed accounts, for example. But again, you probably won't be able to do that until you've got 2 or 3 years of account history. You can look for You Trade Our Money firms in quotations. There used to be a lot of these firms out there, and I think there still are, but like Walter said in the beginning, they ask you for any money at all, then they're probably not legit. So you might want to just sidestep those guys. Of course, there's private investors, and then get creative. There are ways to secure money to be invested. You just have to get creative in finding them. Excuse me. And then this is how you get noticed. So once you've started down this manage account path, then basically right from day one, in my opinion, you should look at joining different trading groups. You can join trading forums. Naked Forex Now is a good forum, for example. And there's all kinds of groups out there that you can join and start building a profile or an online name presence for yourself. You want to create a positive trader profile, really. And when you go to trade for an investment firm, for example, they will ask you for your trader profile. And the easiest way to build a trader profile is to start with things like LinkedIn, Facebook, Twitter. Social media is, those are all social media, and they're quite good. LinkedIn is actually an unbelievably good tool for traders. There is just so much excellent networking on LinkedIn. In fact, all of my positive positions have actually come in one form or another through LinkedIn. So LinkedIn is actually an excellent tool, and it's all about building a profile on LinkedIn that is going to attract firms and other traders, because contacting another trader is a good way to gain access, or joining up with another trader is a good way to gain access to potential funds or people who they know. So, it's like he told two friends and they told two friends, and pretty soon somebody is knocking on your door. So that's a great way to get started. And honestly, that was probably the single best thing I did for myself outside of building my track record. Probably the best thing I could have done for myself was to start building my online trader profile. I started with a blog. I originally had a blog, just a plain WordPress blog where I posted my trades just completely for free in the beginning. I posted my trades. I posted my chart analysis. And one of the things that posting publicly really does for you is it makes you step back and really take a look at what you're doing. It's kind of like talking out a trade with somebody else, even though they're not in the room. So sometimes you'll see things by writing about it that you wouldn't have seen about the setup or the particular trade in question if you hadn't. So it's an excellent way to not only build your profile, but also build your skill level. Of course, look for opportunities to expand. There's so many opportunities out there. The web is just developing like in leaps and bounds every day. There's always something new coming up. There's somewhere new venue for you to expose yourself to. And so on. And then these new social trading programs, these are kind of starting to pop up now. I know of one, I know of several, but I know of one that I really like, where it's basically kind of like hive trading. You get a group of 50 or 100 traders together. If you all have similar interests, and you develop your system together, and help each other improve your systems. And it's really great, because what will happen is you'll give your system, for example, to another trader, and he will give you his or hers, and then you backtest each other's system, so it becomes completely objective, and it's an excellent way to build a positive trading system and build a social presence as well. So those are pretty much those are the core, and I've got a checklist here as well, which basically is just a summary of what we've gone through: system verification, open a live account to establish your real track record, trade for at least 1 to 2 years, online verification, and so on. So this is all part of the basically it's just going over what I've already talked about here. So, and that's about it. So I think probably the best thing to do is just to take some questions. What do you think, Walter?
Yeah, it sounds great. Sorry, I think last time when I was speaking, no one heard me because I think I was double muted. But Colin, I just wanted to. We did get a question from Deshay here. It said, "Which qualifications or what qualifications do you need?" And I'm not sure what Deshay was talking about. If it was just sort of the managed account position. Speaking from my own experience, I landed a managed account position years ago when I first started trading, which was not timely. But what they really look for is the track record, Deshay. That's the main thing that Colin's sort of focused in on here is the track record, and there's good reason for that. You really need to have that record. And like Colin suggested, it depends on, the firm whether or not they're going to take a 1-year track record and say, hey, come back to us in 2 years. But the fact is, it doesn't matter if you're washing cars today. I guarantee you, if you take your record and you've got a record that doesn't have deep drawdowns, like Colin says, it's consistent. When I say doesn't have deep drawdowns, what I mean by that is you can't have one loss wipe out, 33% of the year's gains. You just can't have that because they'll run from that. But as long as you have consistent track record, like Colin said, the amount of money you're trading doesn't matter. It's all about being consistent. So if you guys have any questions for Colin, I have a list of them here, but I don't want to hog the microphone. Like, for example, Colin, one of the questions that popped into my head while listening to you was, why is it, I guess another way to say it is, what is it that the firms want, but why is it that they want you to have a high or an online profile? Why is that important to the firms? That's one thing that sort of popped into my head.
That's a really good question, Walter. It's actually not really important for as far as the firms as far as they're considered. Like, why it's important is that it gets you noticed. You build a good profile, and people start to take notice. And for me, building that profile on LinkedIn especially is what got me noticed. So it's not really important to the firm so much. They're obviously going to look at your profile, and maybe that's the first step, or that's what triggers them into contacting you.
That makes perfect sense. Here's some more questions. I don't know if you can see these, Colin, but Ian is saying, if you're trading other people's money, what sort of deal do you look for in terms of salary, percentage of profits? How do you structure those deals?
Okay, yeah, I can actually see those questions. Perfect. Ian, yeah, good question. Usually, in my experience so far, it's very rare to get offered a salaried position as a private fund manager. It does happen. Actually, the position that I'm going to be starting soon is actually salary based with a bonus, and that is extremely rare. I was totally shocked when they told me that. But usually it goes on performance. It's very, very performance driven. So if you average 10% per month over 3 years, when you sign up with them, they are most likely going to give you a percentage of the profit. So let's say, for example, they charge their investor, or you charge the investor, whether it's through a firm or directly through yourself, a 35% performance fee. That is based on the net profit. And that's really how the trader makes money. So if someone comes in and says, I've got $5 million, I want you to trade it. If you make 10% for a month, if you continue to make 10% per month, I'll give you 35% of those net profits. When you're trading for an investment firm, you're not probably going to get 35%. most likely what's going to happen is they're going to charge their client 35%, or something to that effect. And I think the industry norm right now is around 35 to 40%. And so what's going to happen is they're going to charge their client 35%, and they might pay you 25 or 15, for example. The very first position I got, I was given half of the performance fee that they collected. Does that answer your question, Ian? Okay. Let me see. The next one's from Ramesh. Do you know if requirements in terms of being approved to trade other people's money is the same across the board and the same for most countries? What exams must write and pass in order to handle these sort of accounts? It varies that's a very good question. It actually varies from country to country. There's different ways you can do it. You can actually trade other people's money privately. So for me, for example, I have my own fund I set up with clients from all over the world, and I trade it privately. So I don't need a license to do that. However, the London firm that I worked for a while, I was actually required to write an exam to actually manage the money directly. And until I did that, actually during the testing phase or the probation period, if you will, I actually instructed another trader on what trades I wanted to have placed rather than place the trades myself, because I wasn't actually licensed in that country. So it really varies from one to the next. Like in Canada, for example, we have what's called the Canadian Securities Exchange, and I'm actually licensed by the Canadian Securities. So I can go to work for a Canadian firm and institution and work that route. And I did that all on my own. I just went out and took the course through correspondence, and went and wrote the exam and so on. And it's one heck of an exam, let me tell you. But I've never actually put it to use here in Canada until now. That was 5 years ago. Up until now, I've actually been trading completely privately myself, or through other firms. Okay, Ramesh, does that answer your question? Okay, great. Let's see here. Manoj says, is there a directory of the sort of firms you allude to? Not that I'm aware of, Manoj. That's actually a really good idea. One thing I could do, or maybe before the next one, or maybe I can put one together and post it on my Facebook page or something. But it's really tough. I've never actually gone looking for different firms. I've mostly let the firms come to me. I build my presence and get my name out there as much as possible, and I let them come to me. But there are plenty of firms that you could probably scout. Okay, so next question was Vinay. Vinay says, what is a reasonable return hedge funds typically look for? It really varies a lot, Vinay. It's some will look for 10%, some will look for 5%, some will look for 50%, and every hedge fund is different. But the thing about hedge funds is that the hedge fund typically makes a lot more money than they show the client. So there's a big difference between managing a hedge fund and actually managing an account. Those are two different kinds of accounts, actually. If you get into a hedge fund, for example, the hedge fund might make 20%, but the investor only receives 5%, and the trader receives 5%, or something to that effect, right? So it's really different. The return can vary greatly from one hedge fund to the next. And Deshay says, can you just go and trade family and friends' money without certification or registration? Is the industry not regulated to prevent? You actually can go, if your family, let's say your best friend or your mom, if they open an account with a broker, a regulated broker, they can actually authorize anybody they want through an LPOA form, which you can get most of the time through the broker. They can actually authorize anybody to trade their account. It's a completely private matter in that regard. If they open an account at a, let's say Price Waterhouse, for example, if they were to open an account there, or Merrill Lynch, then no, you wouldn't be able to trade that account. They would have to assign a proper trader to it. But as far as opening an account at any regular Forex broker, there's really not a whole lot of certification required. Okay, Anil. Hi, Colin. Can you recommend some firm to look at? I do have a good record and profile. Okay. At the moment, I really wouldn't know who to recommend to you. Like I say, I usually just let them come to me. But you can actually contact me, and we can, I can try to help you out that way. I'll actually put my contact up here. You can contact me through any one of those ways, or I think I might be able to provide you an email address at the end of the webinar. Okay, Manoj, when you're trading a higher account sizes, do you still use the same retail broker, the same spreads as us? No. Well, it depends. Most brokers will have both an institutional and a retail side. And then there's also kind of a in-between where it's not quite institutional and it's not quite retail. So, typically, unless you've got $1 million to manage or to put in an account, you're not going to get anything. You're not going to get much better than retail out of the broker as far as spreads and so on. Some of the brokers are really good. The broker I use, that I prefer to use, my spreads on the majors are as little as 0.3 pips. And when you're trading daily or 4-hour charts like I do, the spread isn't quite as important. But if you're an intraday trader, the spread is definitely very important. So you might want to look into that. But when you do get into, like for example, when I traded for the firm out of London, it's a whole different ballgame then. Like you're talking a minimum of $10 million, and the spread really isn't relevant at that point. It's either so small that it doesn't matter, or they might have a deal with the broker and just pay a commission, for example, on every trade instead of having a spread. So it really does vary depending on how much money and what who you're through, kind of thing. James says, what's your risk-reward ratio on trades? Well, that really depends on your individual system. For me, I try to look for 2-to-1 for my first target, but that's not always possible. A lot of times I take profit at 1-to-1. But it really depends. Your risk-to-reward ratio is all part of the system that you need. You have to have your own system. And the risk-to-reward ratio is whatever you're comfortable with. As far as trading managed funds, obviously a better risk-to-reward ratio is going to buy you a lot of bonus points, especially if your results are consistently good. If they know that they're going to get in with say a 15 pips SOP and make 45 pips every time they win, they're probably that's probably going to buy you some points, kind of thing. Let's see here. This is from Aaron Trade. Are the hedge funds investment banks more biased towards higher time frames, 4-hour, daily, weekly, rather than intraday, or is there a mix of everything? That's a good question, Aaron Trade. It's really a mix of everything. A lot of companies like the longer term on one hand because it gives them pretty consistent results for the most part. And then there's also a mix of the intraday or the scalping added into it. Typically the scalping or the intraday stuff is considered medium or higher risk, and they always like a mix of the two for for almost any portfolio. In my experience, I've only ever been contacted by somebody who was interested in, swing trading, basically, because that's what I have focused on throughout my Forex career. So I hope that answers your question, Aaron Trade. Ian Ridley says, if you trade for someone else, do you carry on trading from home? Do they care what hours you trade, or is it just a case of stick to the agreed rules? Another good question, Ian. Basically, I've always traded from my home or from wherever I happen to be. That's really why one of the reasons I got into Forex trading was that I didn't want to be stuck in an office building day to day. I wanted to be able to, take off to Phoenix for 3 months or 6 months every winter, or if I wanted to go live in the Cayman Islands for a year, I could, that kind of stuff. That was really why I wanted to get into trading, was the freedom. And I honestly, the new position that I'm going to be starting here pretty soon, for the first 3 months, I'll have to spend some time in the office, and then after that, I will be able to go and trade from anywhere I want to, which is just fantastic. I really wouldn't do it any other way. So I hope that answers your question, Ian. Bogdan says, can you recommend any trading forum or group? Like I said, I'm a little partial to Naked Forex Now, which is a good trading forum. There's just so much information there. But there really are tons of them out there. But you can usually tell which ones are legit and which ones aren't pretty quickly. So just try to look for something, well moderated and where the members have positive or constructive feedback rather than just, slashing and hacking their fellow traders. Like, there are some that, they can get pretty nasty on. So that's what I would be looking for, that in a trading forum or group. But there are quite a few out there. If a retail trader, this is from a knowledge again, if a retail trader has an account and is doing consistently well, will they be approached anyway? No, not by any means. No. You really have to take steps to make a name for yourself. If you do have an account long term with a broker and you're doing well long term, you might be able to talk to the broker and say, can you put me in touch with somebody, or they might be able to help you out. But in my experience, the broker really, it's really up to you to find those options for yourself, or to get those options to come to you, sort of thing. But yeah, I've never had my broker contact me and say, "Holy crap, you're making lots of money. Come trade for us." I've never had them say that. So, from Canu, is there any benefit for high frequency trader than retail trader? I heard there is, such as they use better system. I can't say they necessarily use better systems. High frequency trader is, typically kind of like, it's also similar to scalping, I guess you could say, in one way, is that it's just a different type of trading. There's scalping, there's high frequency trading, which may be scalping as well, and then there's swing trading and position hold trading, and so it's just really just a different method, and it doesn't really matter what your method is, as long as it's consistently making money. That's really all that matters. As long as your money management in place and you're consistently making profits and you're not blowing the account up, whether you're a high frequency trader or you take one trade a month, it doesn't matter as long as it makes money. Bogdan says, have you come to appreciate a certain trading system that showed consistent results over time? Yeah, like I have my methods. I have things that I've used consistently for going on 5-6 years now. Actually, for the first 3 years or so, I only traded 2 different candle patterns, and that was it. Very simple patterns at that. And then over time, I've branched out into a couple of different things, but I don't do anything that I haven't completely back tested yet. But everybody will definitely have their favorites logged in. Let's see here. Manoj says, is there a particular charting platform that is the industry norm? I noticed that the MT4 platforms of differing brokers do vary slightly. If they calculate the moving averages different and things like that, the main difference between MT4 platforms is typically the time of day that the candles will, it depends on what time zone they're in. Moving averages will calculate differently. For example, if one broker closes his daily candles at 4 p.m. New York time and one broker closes his candles at 5 p.m. New York time, you're going to get slight variations. I know, for example, FinFX and FXCM, for example, FinFX will give you different signals off of indicator-based systems, and the candles will look different because there's an hour difference between, FinFX and FXCM, for example. So you will see you'll see small variations between one MT4 to the next. There are different platforms when you get into the institutional level. You're going to have different platforms available to you that just aren't available to retail traders. But in the end, I've found that most people that go from retail trading to institutional style trading still prefer to use MT4 for charting. And the other platform that I do use from time to time, actually I use it for futures, is NinjaTrader. And NinjaTrader can be used on only certain brokers. So I hope that answers that question. Let me see here. Drew says, do you in particular and hedge fund traders in general use indicators and use naked trading techniques? It's all about personal preference, to be honest. It's no different than any trader out there. If you learning to trade naked is extremely important because it really teaches you about price action. Some people do very well trading just off of indicators, but me personally, I started out trading in indicators. I did horribly, to be honest. And then I went to naked trading and I did extremely well. And now I trade a combination of the two. I have a couple of indicators that I like to use, kind of as a confirmation. But in the end, I'm really almost always looking at price action first and foremost. But as far as, there is no industry norm, I would say it really just depends on the trader. Every trader has their own method, so to speak, and every trader has their own idiosyncrasies. It's very open, I guess you could say. Oh, hedge fund, not high frequency. Okay, sorry about that, Canoe. Oh, you are naked trading, yeah. That's right, Walter. I didn't actually say which broker I use. I actually don't. I don't really prefer to. I actually don't know if I can, to be honest. The forum I favor is I like Naked Forex Now, and that's mostly simply because I'm first and foremost a naked trader, and I always have been. And secondly, my good buddy Walter started it, so there's lots of good information on there. Yeah, nakedforexnow.com. Could you please briefly give us an idea how taxation works when you trade as a hedge fund manager who has clients from across the globe? That's from Ramesh. That's a very good question, Ramesh. It depends on whichever country, on the country you live in. So, the taxation, for example, on the funds, that you, like, so if you make your client, let's say you make a client $100,000 in a year, it'll be up to, other than the fee that you collect, that's what you'll be taxed on. The money that they make it will depend on whatever the rules are in that country. Like in Canada, for example, we have rules that, when you sell a house for a profit, that kind of stuff, or you have an investment that does very well, the taxation rules are different than just general income. But as far as a hedge fund manager goes, the taxation from your perspective really depends on where you live. And there are places you can live and get taxed very little. So, that's stuff you can look into. I mean, British Virgin Islands is an excellent place for a trader to live. And I believe, the Philippines is pretty good too, from what I understand. And Costa Rica. So if you do well and you move to one of those places, you might not have to pay as much tax. Yeah, that's right, Walter. It's going to depend on the country. Pan on Fire says, do you bother with fundamentals? Fundamentals tend to get me into trouble, Pan. I find that if I pay too much attention to the fundamentals, I second guess my technical analysis. And so I really try, the only thing I look at fundamentals for now, I guess, is simply to see if there's potential for, like when the markets are flat, when they're not going anywhere, what's going on fundamentally? Why aren't the markets moving? Or if I'm in a trade and I know, like, for example, the non-farm payroll can really be just a wild roller coaster ride. I typically don't take a new trade the day before non-farm payroll if I can help it. And I like to wait until after non-farm payroll, for example. So sometimes the fundamentals are just there to tell you when not to trade. But it really depends on your style of trading. News traders focus very heavily on fundamentals. So, yeah, I hope so. That should answer that. What time frames are you trading? Says Alexander. Alexander, I typically trade. My bread and butter comes from 4-hour and daily charts. I do like to trade the weeklies as well because a weekly trade is something that you can just set and walk away for literally for weeks sometimes. So it's more of an investment style of trading than, actually day trading. But for the most part, I take the most trades on 4-hour charts. Carlos, no, I'm not part of a live trading room anymore. It just got to be too much. And to be perfectly honest, it really wasn't worth it for me. It actually had a negative effect on my trading, I found, because it just kind of pulled me in too many different directions. Good to see you too, Carlos. Reyes says, how long have you been trading for and how long did it take you to be successful? I started trading, I think I started officially trading. I kind of futtered around with it for a couple of years, but officially I started in 2008. I think by 2000 I think I was offered my first institutional in 2011, 2012. But I was profitable for just under 3 years before that. Okay. Are all strategies capable of being scaled up? This is from Manoj again. If, for example, a trader makes 20 pips per trade on the 1-hour chart, the 5K account, then we'll get the fills to make the same profit on $1 million account. Yeah, it really, that's a good question. It does take a lot more volume to fill, you're going to be trading a lot more lots, for example, or a 1 million pound account, for example. But in those cases, you're basically going to be you're going to want to trade when the volume is high. So, from say the London Open through, till about noon New York time, you're going to have the highest volume. You're going to have the best chance to get filled. For the most part, it's pretty tough to not get filled because, Forex is $1 trillion a day industry. There's always a buyer and a seller out there. So, NFP, yeah, not for professionals, yeah. It's a good one. You're welcome, Pan. Okay, I'm being told we should wrap this up, guys. I think we're running out of time. How many trades per month on 4 hours is Alexander? You know what? I honestly don't know at this point. I would say probably, on average, maybe 50, maybe less. I really don't know. You're welcome, Ray. Okay, Walter.
Hey, Colin, thanks so much for spending time here. I hope that you guys got as much out of it as I think you did. He was really kind of you to give us your time like this, Colin, especially when it's in the middle of the night over there in Canada. I really appreciate it. Thank you so much, everyone, for spending time here. Thanks so much, Colin. Have a wonderful day for most of you in Europe, and everyone else, I hope you get some sleep. Thanks, Colin.